So we'd like to get him on right now. Now, since becoming mayor in 2006, Cory Booker has attracted businesses to Newark, including the first new office towers in 20 years and the first new hotels in 40 years. He also convinced Mark Zuckerberg to donate $100 million to the local schools, and is one of the few politicians who can claim improving public opinion polls every year he's been in office. I think I got that right. He's also exploring the possibility of running for the Senate in my great state of New Jersey in 2014. And it's my pleasure to introduce Mayor Cory Booker.
So I know some of you expected, when they heard the mayor was coming, you expected Mike Bloomberg to show up. I am not Mike Bloomberg. We look a lot alike. Somebody's applauding. No, I respect Mike Bloomberg because he gave me the best advice of politics I have ever heard. He said, Cory, before you become a mayor, become a billionaire. And I still have not been able to shake that truth. And that's why I came tonight, because eventually when I do become a billionaire, I would like you all to help me out with my assets. No, the truth of the matter is I'm here really to celebrate the two individuals you're honoring tonight. Jim and I just had a chance to have a brief conversation, and Rick, who I know for a long time, when I heard that my friend was being honored, I wanted to come by and just really celebrate this organization as well as the two individuals that you're honoring tonight. And I just have to say, in a very personal way, if there's any theme that my parents told me about as a kid, was this idea to get beyond the divisions and separations that exist in our society. As a mayor, I've got to be a problem solver, and I've got to find ways to bring people together to solve problems. And my father, who is one of the funnier guys in the world, every chance he got at any occasion that he had, he would give me that advice. First, he would make his jokes. On graduation, it would be, I see, son, you're not magna cum laude, you're not summa cum laude, you're just, thank you, Lottie, I'm out of here. But the issue my father would always say is, he'd say, son, you are the result of a grand conspiracy of love, of individuals coming together across divisions, lines, organizations, race, religion, and helping to manifest the truth that together we can do incredible things. An organization like this, with its deep history going back to the 70s, bringing people together around important ideas, around the idea of excellence, helping to educate. This is a very important organization, and the people you honor tonight exhibit that value of my parents. Rick and I met years ago, this incredibly busy guy, around a board table for an idea, a new charter school that started in the city of Newark called Uncommon Schools. This charter school now has grown to the point where it is transforming lives in my city. It now has multiple different schools within Newark. It has broken cycles of poverty. It has expanded here to New York. It has taken on the resistors of change. It has challenged the very idea of teacher education. It has created a national model. But Rick hasn't stopped there. Rick, in so many ways, is trying to connect people from his life, whether it's from the private sector work he does, the public sector work he does, whether it's the government workers that he knows, trying to connect us all to try to manifest greatness, to try to manifest excellence, to try to help our country live up to what our kids say every single day with a chorus of conviction when they say we're a nation of liberty and justice for all. This, to me, is the most important theme at a time that we have so many forces trying to pull us apart as a country, this idea of a conspiracy of love. It's evidenced in so many of our cultures. In the African culture, there's a saying that if you want to go fast, go alone. If you want to go far, go together. There's a great Israeli leader named Golda Meir who said, once Jews together are strong, but Jews with other people are invincible. There's an ancient Sanskrit word that's seen in Hinduism that is all about this recognition of the important connectedness we have. It's namaste, that I recognize that you and I both have the same spirit, the same divinity. When I was a boy, my parents read me some letters that were written almost exactly on this day back in 1963, where King wrote that we're all caught in an inescapable network of mutuality, tied in a common garment of destiny. So tonight, as you celebrate these two people, I want you to celebrate this organization that is bringing people together for a noble purpose, is trying to create a conspiracy of goodness, a conspiracy of purpose, a conspiracy of love. And I want you to know that the two people you are honoring tonight are not just exhibiting excellence in their professional capacity, but also in their willingness to fight for this nation's higher principles. I see the evidence of this amazing connector in my city, in Rick Rieder, every single day, as he further helps this nation live up to its promise. And I'll end with this note, end with this simple note. I remind people all the time that when we sing the national anthem, it starts with a challenge. It challenges us. Can you see? Oh, say, can you see? We in this country have a challenge with vision. We've got to begin to see this country for what it can be, what it should be, what it must be. I, as a mayor, know the importance of the financial markets, the importance of liquidity, the importance of GDP growth and investment. In fact, one of the best things we can do to deal with poverty and those issues is to help create more jobs and more opportunity. When I try to do these big development projects with these complicated capital stacks, it's investors and people from the financial industry that have been there to help me bring about Newark's biggest economic development period since the 1950s. That's how much we're booming. In fact, 1/3, Newark is only less than 300,000 people in a state of 9 million people. Last year, 1/3 of all the economic development in the state in commercial and multifamily was going on in Newark. And that's because people didn't see Newark as it was. They had a vision. They challenged themselves to see us as we can be. It's that kind of vision, to see that we all need each other, we're all connected to each other, that we can be a country that exalts our highest principles and ideals, that exalts that very hallmark of our country, e pluribus unum. That, to me, is the challenge, and that, to me, is the spirit of the honorees tonight and the spirit of this organization. So thank you for your vision. Thank you for seeing fit to honor two incredible gentlemen, and thank you for allowing me to share a few moments with you as well. Thank you.
My picture with him is going right on my Facebook page immediately. So, thank you, Mayor Booker. Now's the time where we give you the layout of the evening. Right now it's time for dinner, so eat, drink, mingle, relax. The bar will be open till about 8 o'clock, so help yourself. And when you walked in, you saw a sports memorabilia table. We have partnered with Steiner Sports so that Fiazi can donate all of its profits from this auction to the Memorial Sloan Kettering Cancer Center. We even asked Steiner to personalize the event, and you'll see items from the Baltimore Orioles and the New Jersey Devils out there. That's for Rick Rieder. And you see items from the New York Yankees and the Brooklyn Dodgers out there for Jim Grant. Okay. Okay, thanks. So there's a sports memorabilia table out there, I think you saw. We have our proceeds from this event will go to Memorial Sloan Kettering Cancer Center. And we personalize the items for Jim Grant and Rick Rieder. So you'll see Brooklyn Dodgers items and Baltimore Orioles, New York Devils. So that'll be open till about 8:15, and we'll start the inductions right around 8:15. So enjoy, and we'll see you soon. Thank you, everybody. If we could take our seats, please. Thank you, everybody. If we could take our seats, thank you. Is it better? That good? Okay, great. Okay, everybody, thank you. FIAZI does three things. First, we have a monthly speaker series where we get experts in many different areas related to finance to speak to our members. Second, we sponsor recruiting events at local business schools, like the one we just had at NYU Stern School. And third, we do this, the Hall of Fame. And membership to FIAZI gets you access to all of that. Can I have a show of hands? How many of you have a bachelor's degree in finance or economics or accounting? Show of hands. How many of you have an MBA? How many, keep your hands up. How many of you are CFAs? How many of you work in finance? There you go. All right. Well, all of you have had your hands up, have had your professional career shaped in some way by the people in the Hall of Fame. Some of them are maybe even here tonight. From the textbooks you've studied, from the theories and the formulas you use every day, and from the advice you receive to the funds you invest in, there's a near certain chance that your career has been shaped by one of our members of the Hall of Fame. Just for example, here tonight are Ed Altman, Margaret Cannella, Frank Fabozzi, Larry Fink was here earlier, Marty Fritzen, Andy Calate, Marty Leibowitz, Bob Levine, Jack Malvey, Glenn Reynolds, Dexter Senf, and Dick Wilson are all here tonight. And some of them, or all of them, have influenced your career in some way. So why don't we add two more names to that list? Our next speaker can be seen on Bloomberg TV every day at 2 p.m. as the host of Money Moves. All you have to do is type TV on your Bloomberg and up pops the screen. And if you watched her show on Monday, you would have seen her talk to her special guest, Jim Grant. Here to help us induct Jim into the FIAZI Hall of Fame is Deidre Bolton.
Good evening, everyone. It's a privilege for me to be here tonight and introduce my friend and favorite TV guest, Jim Grant. And when Jim told me that he had the honor of being inducted into the Fixed Income Analyst Society, I was thrilled to be included in celebrating his achievements and in being here with all of you tonight. And Jim was really helpful, gave me some good language to use, such as all, or let's say among my TV guests, Jim is the tallest, which is true. And if any of you have been to Bloomberg while I'm interviewing Jim, you will see I actually even have to stand on an apple box. But to those of you, probably everybody in this room who know Jim's work well, not only is it unique, and he has this lone wolf editorial voice, which obviously all of us are addicted to the content, it's really enjoyable to read because he has such a great sense of humor, and often at his own expense, and that comes across. But I think what's really great about his work is that no matter what your position is, whether it's a trader, whether it's a journalist, a researcher, an investor, you know how hard it is to develop and basically defend your independence of thought. And Jim's track record goes back to the 80s, right? He called in advance many of the events that either you had to trade off of or report on, the junk bond crisis, bank lending recklessness, cracks in the Japanese system. He warned in a series of articles, 2007, 2008, was prescient in his views to the point where a lot of newspapers said, if Jim Grant could figure this out, how come the regulators couldn't? Since Jim started his career as a member of the Fourth Estate, there's a little shout out to journalism and his background. We have put together a reel in the spirit of journalism with some of Jim's best calls, more recent, so these are some of the calls for which I am sure he will be vindicated. Take a look.
it ought to get out of the business of price fixing. It ought to get out of the business of market manipulation. This kind of weaseling, we are now concerned about the potential possibility of consequences we didn't intend. Look, the Fed has imposed a structure of interest rates that is not only the invitation, it's the command to market distortions.
So if the Fed does less, or at least doesn't do more, do you think there's hope for us?
Yeah, of course. Deirdre, this country is indestructible, try as the Fed might. The patient is over-medicated, in my opinion. They keep on dosing us collectively with these measures as they call them, repress financial activity, to stimulate, to manipulate. Enough. How about the price mechanism? How about capitalism, Ben Bernanke? It's important that we lament our debt. It's important that we debate the 16-point-something trillion that constitutes the gross public debt, because there are no more checks on its growth other than civil and informed discussion. We used to have a gold dollar. There was only so much gold. Is only so much gold. Therefore, there could only be so many dollars. That's gone. 40 years ago, it's gone. We used to have an interest rate structure that itself constrained the growth of the public debt because it became prohibitively expensive to borrow at rates of 6 and 7%. We borrow now at 2%. But Deirdre, if rates were as measly as 4%, we would be spending as much on covering our interest charges at the federal level than we currently spend on Medicare. So the distortion of interest rates, much of which is the consequence of Fed action, has seduced us into a most dangerous complacency with respect to this immense debt.
So you've made the case that instead of raising the debt ceiling, we should actually lower it.
Just by a symbolic dollar. Okay. Just by $1. I want to have somebody champion the reduction of the debt ceiling. And I also would like to hear someone utter the self-evident truth that this is a fiscal problem that is the underlying cause of which is a monetary problem. The price of gold is, as it were, the reciprocal of the world's faith in the deeds and words of the likes of Ben Bernanke. The world over, central banks are printing money as it has really never been printed before. The European Central Bank, over the past 3 months, has increased the size of its assets, its balance sheet, at the annual rate of 89%. 89%, Deidre.
Yeah,
Look amazed.
it's
astonishing. The bond market is a desert of value. There's simply nothing there, and yet because it has gone up, because the Fed wants it to go up more, it is beloved by the professional investors. Somebody was quoted in Bloomberg's story just the other day as saying, one of these $1 trillion plus bond investors, saying that he personally would not invest in securities yielding less than 2.25% per annum, because that's not really a value proposition. Less than 2.25%, more than, so he's going to wait until I get back to the 10-year gets back to 2.25% from 2.
Right.
That ain't value. Think about the screen as not as modern art, but as modern currency.
All right, sir.
Yeah, this is the flight, I say, into things from paper. You ever heard a tune called "It's Only a Paper Moon"?
Yes.
And hanging over Cardboard Sea, and there's a line, "It's a Barnum and Bailey world, as phony as it could be."
Yeah, I wish we had a piano player
This is the world in which we invest. It's the only world we have, so we can't be sour on it. But it is a world of immense wall-to-wall manipulations by our friends in Washington. And and people get off on Goldman Sachs because it has done this and this to futures. It is in pulling wires. The Federal Reserve is this giant squid of squids.
So some of Jim's great comments. Jim did tell me that he felt smarter and richer, of course, before gold's move, but we won't maybe bring that up too much. In any case, it is understandable that Ron Paul would have nominated, so he said, Jim as Fed chairman, and glad that didn't work out in some ways, because we can look forward to many more years of Grant's Interest Rate Observer, which we should signal is going to be celebrating its 30th anniversary this fall. Of course, prolific writer. So without further ado, it is my honor and privilege to introduce Hall of Famer Jim Grant.
Think how great that video would have been if there had been more Deirdre. Well, that was Youth and Glamour has spoken, and now comes age and experience. By the way, is this in any shape audible? Yeah, and is that a good thing? My life in fixed income began at birth. Well do I remember the yield in long bond in July of 1946. It was 2.41%. Fast forward now to 1981, long bond had somehow ascended to 15% yield to maturity. And Richard S. Wilson, the great long-suffering Hall of Fame Wilson, the man who assured me as a green reporter at Barron's that bond prices really do move inversely with yields. This same wise Wilson now tipped me off to the fact that Mr. Market was handing out free options. Because interest rates had been rising for over 30 years, people had come to assume they would never fall. And so one-sided was sentiment, as Dick observed, that call-protected utility bonds commanded prices no higher than non-call protected utility bonds. How could such a thing be? Are not markets efficient? Well, yes, up to a point. I came to understand that markets are just as efficient as the people who operate in them. On the authority of the late Sidney Homer, interest rates rise and fall in generation-length cycles, or at least they have tended to do so, Mr. Homer not setting up as a prophet, but rather as an historian. They fell for 35 years after the Civil War, a bond bull market fully matching the duration of the 1946-81 bear market. So muscle memory figures powerfully after the passage of so many decades. What is it that economists say? Ah, yes, expectations are anchored. So anyway, in 1899, the president of the Equitable Life Assurance Society of the U.S., a fellow named James Alexander, solicited the opinions of scores of the most respected American financiers concerning the future source and course of return on income. And the Rick Rieders and the Rob Kapitkos and the Marty Fritzens and the Marty Leibowitzes of the day, what, Alexander asked the eminences, could the Equitable expect to earn on senior securities over the next 20 years? That was the question. So if Alexander had had an inkling that a bond bear market was just about to start, he was the only one. His letter elicited 69 responses, not one of which, anticipated the rise in interest rates that would begin in 1900, a year later, and persist through 1920. High-grade railroad bonds, Henry Clay Frick called them the Rembrandts of investment, then yielded 3% or so. They would continue to rise and yield to about 5%, but nobody thought that. Groupthink may be a new coinage, but surely the phenomenon is as old as the hills, or at least as old as finance. Now, investors like us, we would clearly love to know the future, but the gods refuse to tell us. What we can know is how others are preparing for the future, and we can imagine how posterity will second-guess us in the future. What will bond buyers and analysts and underwriters and salesmen of tomorrow see so clearly that we ourselves cannot perceive today. And I'm going to bet that posterity will marvel at our complacency in the face of a revolution in monetary affairs. At Jackson Hole last August, Chairman Bernanke admitted the Fed is, quote, learning while doing. Never mind that the historical monetary record spans millennia. The Fed has determined to make it up as it goes along. We should listen more carefully, it seems to me, to what our monetary mandarins are saying. There should be no fixed standard of value in money, they say. They themselves will adjust the size and purchasing power of our collective monetary wad as they think best. Trust us, the central bankers say in so many words or in so many stanzas of differential calculus. Up until 1971, with time out for the Civil War, the dollar was defined as a weight of something, gold or silver, mainly gold. In the Constitution, the power to regulate the currency is spelled out in the same clause as the power to regulate weights and measures. The dollar was an object. Sound as a dollar is a phrase that derived from the ring of a gold coin on a hard surface. So that was then. A currency without a fixed value is something new under the sun, and something also novel is central bankers protesting against a rate of inflation they judge to be inadequate. Only this afternoon, today, a trio of regional Fed presidents went on record to vow to protect the Fed's 2% inflation target, quote, from below. What will posterity say to this? Digital technology is helping to reduce the cost of making anything, yet central bankers refuse to let prices subside. Never mind that most Americans seem to spend most weekends seeking out everyday low and lower prices. The Fed wants them to know that they ought to be hunting for higher ones. It is better for them, better for the country. Actually, only slightly higher prices, our monetary masters insist. They themselves will materialize just enough money to germinate growth, but not so much as to raise up inflation much beyond 2% per annum. Their dynamic, stochastic, general equilibrium models will tell them when to say when. Today's Fed refuses to distinguish between deflation and progress, nor does it explain how the U.S. economy managed to flourish for years on end with measured rates of inflation of less than 2%. I refer specifically to the early 1960s, the Mad Men era of American finance. In that not-so-distant day, for about 6 consecutive years, the measured rate of inflation was never higher than 1.9%. Yet, from 1962 to 65, real growth came in at rates of as high as 6.4%, real rates. This was in the heyday of Bretton Woods, fixed exchange rates and the like. Now, of course, this Arcadia didn't last. Arcadias don't last. Humans are fickle creatures, and our lives and economies are dynamic. Come the Vietnam War, guns and butter, and the breakdown of Bretton Woods. By the late 1960s, bond yields were climbing to heights not seen since the Civil War, though the bear market in fixed income securities had hardly begun. There's no inflation, the Fed says. But bond people know better. There is a rip-roaring inflation in the price of income. The cost of retirement, not to mention the cost of idle living, very important, has been going through the roof. John Maynard Keynes spoke hopefully of the euthanasia of the rentier, and he is coming closer and closer to getting his wish. So bonds have become a kind of a giffen good. One's more highly prized and sought after, the more expensive they become. Observe the rush of money into bond funds. Behold the plunge in yields in securities of every description. With last week's sale of $600 million of double B rated, double B, mind you, 5-year notes of CNH Global at an interest cost of just 3 5/8%, came proof that the phrase high-yield securities has become an oxymoron. The bond bull market that started in 1981 is now closing in on its 32nd birthday. I wouldn't bet my life on the proposition that it's either over or ending, but I would bet my dog's life. But this too will pass. In the bond business, nothing is permanent. Everything is evanescent. Nothing is permanent except for the certainty of change. Only reflect on the improbability of a self-employed journalist being invited to join this Valhalla of fixed income legends. Anything can happen. And now, with my induction, it has. Fixed Income Analyst Society, Ralph and Deirdre, I thank you all.
Our next speaker will introduce Rick Rieder. He is the president and co-founder of one of the world's largest asset manager. He is of the world's largest asset manager. BlackRock currently manages around $3.9 trillion in assets. That's with a T. In a cover story in Institutional Investor magazine last year, Rob Caputo was described as having humble roots and being perfectly happy keeping a low profile. One quote in the article was, quote, "Larry Fink spends more time in the public arena and Rob keeps the engine going, but it would be a mistake to underestimate Rob's strategic vision and innovation for the firm." Rob, I don't think anyone in this room underestimates you. Ladies and gentlemen, Rob Caputo.
Okay, good evening. You just scared me, Jim, when you went back up. I thought we were going to do that again on tape or something. Okay. Thank you very much for having me here tonight to introduce Rick Rieder. This is a very, very special occasion for Rick and all of us at BlackRock especially. This room is very famous, as you might know. This is the room where Gordon Gekko gave his favorite speech in the Roosevelt Hotel. So it is a very special night. I'm glad the Fixed Income Society picked this room. It was fun to see Cory Booker here. He has a lot to do with fixed income. He told me that he told me that the reason he didn't stay for dinner was because he saw Steve Lessing and Humphrey and McDade here, and he figured he can get a table at Il Molino tonight for the first time. And Deidre, it's very nice of you to be here. It's really hard for me to pay attention to interviews when you're on that screen interviewing. Anyway, it is an honor to be here before such a talented and eclectic group as I welcome Rick Rieder into the Fixed Income Analyst Society Hall of Fame. And there are a lot of legends here tonight in this business, and our business is going through quite a lot of change and quite a lot of ups and downs. But it's indicated by how long it took everybody to sit down tonight, what a great group of people are in the fixed income business, just great colleagues that all wanted to catch up with each other and talk about life and how everyone else is doing and catch up with each other. It's really a nice thing. And it's really beyond the legends that were announced that are here tonight. A lot of people that have worked very hard, whether it be in sales or trading or portfolio management. I would contend, after now managing a pretty large business that has both fixed income and equities, that the breed of people that are in the fixed income department are just an incredible group of people. So I'd give everybody a round of applause here. So, Rick, it is really difficult to put into words how much you have contributed to the world of fixed income and to many of us around this room personally. It's been your leadership, your integrity, enthusiasm, and your partnership that has been an inspiration to all. And it's about the pride you take in what you do, the relationships that you cultivate, and the passion that you display for investing that has a definitive impact on your colleagues and the clients that you serve. Now, though a great deal of the stories in fixed income, particularly the credit business, in the 80s and the early 90s are restricted under the silence code agreed to in the Lehman, Solomon, DLJ, Drexel, and Bear Stearns Peace Treaty, there is no question about the significant role Rick has played in those stories. Rick was so good at what he did that he put many of his competitors out of business. And he's such an overachiever that he actually helped to put his own firm out of business as well. So what was not covered in that particular treaty was later codified in the Fixed Income Credit Rulebook that was buried, of course, in a time capsule to be uncovered in 2030. It was determined that 2030 is the year the first tranches of securities Rick and some of the previous fixed income inductees have invented, and they will actually mature. I have been approved by the bankruptcy trustees to those firms to display a few charts and topics from this buried rulebook. So first, if the results of a trusted analysis begin to show signs of failure, it is appropriate to simply change the model to fit your desired result or rename the product. Now, this is proven by the proliferation of acronyms during your tenure, Rick, like CDS, CDO, CLO, MTN, ABS, FRN, MMP, ISDA, TRUPS, Tracers, Trains, iTrax, COCOs, BMA, Trace, and finally my favorite. And this is IHGAFC. You know what that stands for, James? It says, I haven't got a friggin' clue. The second chart is Rick's real contribution to fixed income. This shows the amount of Treasury borrowing that has changed from when he joined the Treasury Borrowing Committee through his vice chairmanship today. Now, I've never told you, Rick, that Bernanke called me at your first meeting. And he said, who is the guy that takes off his jacket, rolls up his sleeves halfway, and orders a pizza during the meetings? So Rick also has a portfolio management section dedicated to him in this rule book. And this is next to past inductees, Keith Anderson and Ken Leach. And this is on the topic of duration weighting. This is also in Frank Fabosi's book. Now, you need to look closely at the title of this section. You might think I said duration weighting, but I said duration weighting. And this is where you take the duration and then wait to see how long it takes until you are right. Now, you can't introduce Rick without mentioning golf. And here, Rick is a bit confused. You see, he is convinced that golf scores and bond prices are very similar. Someone needs to tell Rick that par in golf is around 72, not Rick's score, which is more like the current price of the long bond. So now let me give everyone a little background on Rick's journey to Wall Street. Rick earned a BBA degree in finance in 1983 from Emory University. This is the place, in case you know, that rich kids from Westchester and Connecticut go to. And an MBA degree from the Wharton School of the University of Pennsylvania in 1987. He is a member of the board of Emory University and a founder and chairman of the business school's BBA Investment Fund. Rick began his career as a credit analyst at SunTrust Bank in Atlanta. He then moved over to Lehman Brothers and spent over 20 years there in various roles, including global head of principal strategies, global head of credit, chairman of the Corporate Bond and Loan Capital Commitment Committee, and a member of the Board of Trustees for the Corporate Pension Fund. Following his career at Lehman, Rick served as president and CEO of R3 Capital Partners. In 2009, Rick joined BlackRock and currently serves as Chief Investment Officer of Fundamental Fixed Income and co-head of America's Fixed Income and a member of the Global Operating Committee. In his free time, which I'm not sure how much he has, he takes a very, very active role in the community. In Newark, as you heard from Cory Booker, he serves on the board of North Star Academy's 9 charter schools, the Big Brother, Big Sisters, and the local youth foundation. Outside of Newark, he serves on the board of the Graduation Generation Public School Collaboration and the Hospital for Special Surgery. Beyond this long journey of education, research, and successful career positions, there are some special traits that really make Rick stand out. He has the ability to listen, to counsel, to anticipate situations, and respond quickly and calmly. And while he does an advertisement, there's a long list of friends and family and charity that he takes care of because it is the right thing to do. And his wife, Debbie, is here as well. I'm certainly one of the people that has benefited greatly from my personal and professional relationship with Rick. And while Rick may have preferred an induction into the World Golf Hall of Fame, this is a pretty good second. So please join me in congratulating and welcome our colleague and friend, Rick Rieder.
Thank you all. Thank you, everybody. Very much appreciated. And I didn't know. I actually found out a couple of days ago that. Can you hear me? This has been off and on all night. Can you hear me? Can you hear me in the back? Yeah. I want to thank Cory Booker for coming. He's been a good friend for a long time, and we are trying to raise money for our schools. So under your plate, you'll notice an envelope. If we can get $100 from everybody, we can get a lot of schools built. I do want to thank everybody for coming tonight. I can't tell you what a massive honor this is, and in particular to see everybody here tonight, which I can't tell you. I'm a very lucky man to see everybody here and appreciate that. I also remember Fiazi. I remember the Hall of Fame, and Russ Brownback will remember this. I think Jack Malvey actually founded. I think this is right. I think Jack Malvey actually founded the Hall of Fame, at least partially. Came up with the idea and formulation for it, and I regard Jack as a god in this industry and with a broader perspective on this industry and markets than any mere mortal that I've ever met. I don't know if Jack's here, but I think he won. There he is. So Jack now works for a competitor. He's not that good. So. So I also want to thank Mark Howard, who drove the process today, and it was a lot of work that I know. And so Mark, I don't know if many people know this, but Mark was my research partner for a lot of years, and he taught me how to look at companies, taught me how to look at cash flow, taught me how to look at balance sheets, equilibrium, disequilibrium in markets, and has had an impact on me that I don't think he knows for many, many years. So I have great respect and admiration for Mark. I also want to congratulate Jim Grant, whose work I've followed and listened to for many, many years, and I appreciate your comments and very deserving of this recognition. And as I said, I'd like to thank FIAZI for this event, which I think is extraordinary. I've gotten a chance to present at some FIAZI events over the years, and I adore the dialogue, the insight, the analysis, and some great minds in this industry that are associated with it. So I appreciate that, and thank you. Anyway, I brought some slides. So it is, as everybody knows, I don't know if Adam Bobker was here, but he said at a client meeting that I could speak for 30 minutes. So I did an hour and 20. And so I brought a few slides tonight. Somebody said, you've got to have some PowerPoints. So I've got some PowerPoints. And I wanted to talk, I was trying to do is put some perspective on the Hall of Fame and think about the Hall of Fame and put this whole thing into perspective. And so you're going to have to bear with me. I present every day, many times a day or many days in front of big audiences. Speaking about yourself is a little harder, so I'm going to try to work my way through it. But I've got 127 slides, so if you would bear with me. They told me which is forward and back, so there we go. I'm on a roll. So anyway, I tried to put in perspective what the Hall of Fame was, and all I could think about is Hall of Fame is sports. And the Hall of Fame, when you actually think about what it is, it happens at the end of one's career. In fact, not only is it at the end of one's career, a baseball player, in fact, I put the rules, this is for the Baseball Hall of Fame. And the rules for the Baseball Hall of Fame is that you actually have to be retired for, you have to be in, I think it's Major League same time, some period, 20 years before, and ending 5 years prior to election, which I thought was interesting. And then and there you go. Sorry, the green button forward. So then I also looked at the Basketball Hall of Fame, and it's also, interestingly, you also have to be retired for 5 years before you are elected into the Basketball Hall of Fame, which in sports is a pretty hard thing since players retire, unretire. Brett Favre, I think is going in the Football Hall of Fame at 85 years old. But then the Fixed Income Hall of Fame is actually different, because a Fixed Income Hall of Fame, you're not retired, you're not 5 years after you're retired, you're actually hopefully in the prime of your career, early in the prime of your career. So I thought what was interesting is I figured I'd chart it. And I thought this was interesting because, many of the ways that we describe in fixed income, what is the opportunity set in fixed income is where is the interest rate dynamic. And I thought it was interesting because Bill Gross in 1995 got into the Fixed Income Hall of Fame when the short end of the Treasury curve was about 6%. John Bogle, another legend in the industry, in 1999 was at 5%. Dan Fuss in 2000 was at 6%. Larry Fink at 3%. We backed up a little bit so that Ken Leach could get it when it was at 5%, and then I've been able to get it when it's at 0%. So you think about where the curve's going from here, as Jim described, probably not down. So at the prime of my career, my opportunity set, not only is it 0, it's actually in some cases slightly negative, so the upside is tremendous. So anyway, that's many of the legends and where I am. Then I also thought I would take another look at, when I first thought about the Hall of Fame, and quite frankly, Mark Howard was kind enough when he mentioned this to me. I looked at the people that are on this list, and it is an extraordinary group of people. Late Fisher Black, who invented the Black-Scholes model, option pricing model, changed Wall Street forever by developing what is now known as quantitative finance. Prominent mention in 1997, Nobel Prize given to co-authors. Co-authored the Black-Derman toy interest rate derivatives model developed in Goldman Sachs in the 1980s. I have no idea what that is. Graduated... and we manage a lot of interest rate risk. And we also graduated from Harvard in 1959, received a PhD in applied math from Harvard in 1964. There's, again, the red button. Marty Leibowitz, who was here earlier, and Corey was a little late, so he's left. But he prolific author of 150 articles, of which received prestigious awards, including Inside the Yield Book, which is the first book that I ever read in fixed income, which today is an extraordinary book. First member, actually, in the FIAZI Hall of Fame. Among other things, bachelor's degree from the University of Chicago, PhD from the Crown Institute of NYU. And then Robert Merton received the Nobel Prize in Economics in 1997, past president of the AFA, member of the National Academy of Arts and Sciences, received the Alfred Nobel Memorial Prize in Economic Sciences in 1997, joined faculty of MIT in 1998, and moved to Harvard in 1988. He's back at MIT now? Is that right? I don't know. Well, here's mine. So, I also made some discoveries early in my academic career, I put up on the screen, and I don't know if you all in the front, because I know you can't read it in the back, but I don't know if you all in the front can read the formula. Can anybody in the front read it? Can you all see what this is? Yes? This is actually the fermentation process for beer. So I had early in my academic career, I had a discovery, and it was in fact beer, which further led to my academic credentials. So I had, and I'll blow this up for people in the back in a second. So I don't know, and Rob didn't mention this, and many people don't know this. So Russ and I went to Hobart College, and Hobart is a great small school in upstate New York. But I don't know how I got into Hobart, because I had a slate as my mom, who was sitting right in the middle. So don't heckle, because my mom is here. I had a slight motivation problem in high school, and of which my mom is forever proud. And then I went to Hobart College, and again continued the academic motivation, and then also really discovered beer, and then, so I just wanted, as I got to Hobart, I just want to go, the fall of 1979, I took Worlds and Anti-Worlds. I have no idea what that means. Russ, I don't know what that is. And then I took Applied Calc, got a B, but it was followed by, in the second trimester, I took Applied Calc 2, which I got a C in, so I was clearly moving forward. And then I took Contemporary Issues, no idea what that means. And then Rome, I got a C, which I seem to do well eating in Rome today, but I got a C in Rome. Also, the thing you don't recognize on this page is, and Russ will attest to this, there's actually, you take 3 classes every trimester. The reason why it's only 2 is because I failed the 3rd class. And of which my mom is forever proud that and Dad is forever proud that I was then put on academic probation. I just want to say one thing before I go on, because I don't want to be fired tomorrow, Rob. I did go on to Emory, and I did do reasonably well at Emory. I graduated 3rd in my class. My wife graduated 1st, so tomorrow you might want to hire my wife instead of me to run the portfolios. And then I went on to Penn for my graduate degree. But I didn't do as well as you, Rob, and I'm still trying to get my job back after the Hobart experience. Okay, back to beer. Okay, red, green, forward. So finally, I just thought I'd put Fisher Black up again in case you didn't know, and then me and the 2 of us in the Fiazzi Hall of Fame together. Again. I'm sure Marty Leibowitz is thrilled to know that I have these credentials. Okay, so then I also wanted to mention the last thing. Well, no, I have a couple other slides, like 80 more. I got some really nice notes. When you get inducted in this Hall of Fame, people are incredibly sentimental and say, you deserve this, and what you've done in your career, and what you've done for other people. And anyway, my good friend Mike Gelban wrote me a note. He said, Rick, I received an invite for your induction in the Hall of Fame. That's pretty, by the way, he's not here. That's pretty cool. He said, I have a board meeting in Michigan that I've got to get to. By the way, I think that's garbage. But he said, Rick, I received an invite for your induction in the Hall of Fame. That's pretty cool. Congrats. You've certainly worked hard enough. Damn, this thing. Actually, I think Deb should be the one inducted. And this is my favorite. And this was one that was driven by a grievous error. So one of my best friends in this business has been very good to me for a lot of years. And with the whole hubbub of putting everything that goes on in life and work, and I forgot to put him on the list. So anyway, he sent me a text, which I thought was very nice. Hey, you suck. You're being honored on April 18th, and I didn't get the look or invited. And then he followed on, and I left it anonymous, but people know who it will be. You're dead. I'm bending your golf clubs again. This is a true story. I don't know where he is, but I probably shouldn't give him up, but he did, in fact, write that. I did actually, I must say, I did actually get some tremendously nice notes from Mike Ryan, who's here tonight, and Jack Malvey and Marty Leibowitz, which I very much appreciated. And then I also, the last slide that I might know, I got a couple more. There are two people that I don't know if anybody in the audience knows who are actually really I owe my whole entire career to, and I don't know if anybody knows who these people are. It's Dennis Austin and Thomas Rudkin. Oh, again with the red. They originally designed for the Macintosh computer. The initial release was called Presenter, developed by Dennis Austin and Thomas Rudkin of Forethought. In 1987, it was renamed to PowerPoint. So as many of you know, I've spent my entire career on PowerPoint, and as my wife will tell you, many nights, many weekends on PowerPoint. And the beauty of PowerPoint, that Annalise, who works with me, will tell you, because she helps me, and Julianne Russi, who's here tonight, is it's an effective way of communicating, teaching, and learning with a clear, simple, and powerful display tool. So this was the presentation I gave today. And as Adam Bobkirk will tell you, I literally think I spent 25 minutes on this page. And I was describing the U.S. consumer and then the wealth peak and liquid assets and debt service interest income, leading to households beginning to take on more risk. I had a little text on the bottom, and then I went through the dynamic in terms of personal income. And then I went and I put some arrows in. And then I related this right to domestic bank tangible equity trending up, which was pretty clear. So I'm sure the founders couldn't have been more proud of my work on PowerPoint. Anyway, I want to say now I am literally finishing up, and I want to say a couple of things, in all seriousness, that about this industry. I'm a very, very proud member of being in the finance industry, and this industry, has a much better reputation years ago. And, I think about this industry. My brother's a cardiologist. My brother saves lives every day, and that's probably a more noble pursuit than what is pursued regularly in finance. But I truly do believe that this industry does some great things, while not nearly as respected as it used to be by the populace at large. And I think what Rob Capito and Larry Fink have drilled into me and many in this industry is that we're fiduciaries in what we do, and those who count on us for their well-being and their standard of living, and I believe in that. I truly believe in that today. And I also think there are many people in this industry and in this room who have done absolutely incredible things for society, both with their time and resources, and I'm quite proud to be part of it. So as much as Rob gave me a bunch of grief tonight, as he always does, guys like Rob Capito is one of the major donors and supporters of things like Hopes and Heroes Children's Cancer Fund, the Wounded Warrior Project, the Marine Law Enforcement Foundation, the UJA, the University of Pennsylvania, guys like Bart McDade and the school he created in Connecticut, all the education activities he does. Paul Tudor Jones become a really good friend of mine, and the work, and he was trying to be here tonight, but he's actually literally with Larry actually at a big philanthropic event tonight. I think it's Robin Hood or Audubon. Anyway, I can go on and on. Debbie Goldfarb, by the way, who helped me, who runs philanthropy at Barclays, who actually got me involved in North Star, has also done some incredible things. And anyway, when you go through the quotes, and I won't go through these, but it's pretty amazing things. And she helped me with some of the data in terms of the top 15 financial service firms, in terms of what they do and the amount of money they give. And there are 30,000 nonprofit organizations in New York City alone. Many of them are funded or board represented by people in the finance industry. And as I said, many of these people are in the room tonight. So, I think the industry doesn't get enough credit because I think some of the most generous people in the world sit in this industry. Last thing that I wanted to say, and and I'm very lucky that most people don't get a forum to say this. And there are I've met and I've been associated, including in this room, some of the most incredible people that anybody will ever meet in their life. I mean, obviously I owe a lot of my career, my life to my wife and kids who let me work like a dog. And we were watching home videos of our lives together over the last few nights. And certainly work has infiltrated much of that over the years. We've had a pretty incredible set of experiences together. But also my parents who, despite my Hobart experience, who've also, this industry has a lot of ups and downs, and they are tremendous in terms of being there for me. But I've gotten a chance to work with Larry Fink, who I showed earlier, most inspirational guy in this industry, I think. Rob Capito, one of the smartest, inspirational guys as well in this industry, maybe one of the great executioners of strategy in the industry. Bart McDade, quiet but extraordinary leader who taught me virtually everything I know about investing, trading, leading, and everybody knows I can't do it as well as Bart does it. Bill Milliken, who had a personal issue. So I don't know if you know Bill. He created Communities in Schools, which touches 2 million kids in this country. Anyways, one of my closest friends in the world, and got me involved in Communities in Schools and done incredible things. And then I also wanted to mention Russ Brownback, who came from upstate New York, who so for years, he is like the Wizard of Oz. He works in Cazenovia, and he was always the one, and I don't think people at BlackRock know he was the one actually managing the money from Cazenovia with all the ideas. People like Cory Booker, and I tried to, this was, for me, it's a little bit like, watching the videos of of our kids growing up. And when I went through this and I thought about the people I've been associated with and how many times I looked at this in mind, there's another 100 people. Anyway, many of them are in the room tonight, and I can't thank you enough. If I don't know that I deserve to be on that FIAZI list, certainly not my academics, but I thought about this. If that FIAZI list could be 200 people that I could put on the list and then footnote me for being associated with it, I think that's probably more appropriate. So anyway, thank you all for everything, and it's great being here tonight.
Thanks, Rick. Are these your? There you go. Best part of the evening is listening to the life stories and the careers of people, the ups and downs, the barriers that they had to break through is very inspirational. 2 things before you go. This evening wouldn't have occurred, and FIAZI wouldn't be half of what it is without the contributions of Mark Howard, who's sitting in the back there. Mark, if you could stand up. And Lauren Nauser, if you could approach the stage, please. Lauren, there you are. Anyone who's ever had anything to do with FIAZI, if you registered tonight, if you get to any of one of our speaker series, you know Lauren, you love her, and we just want to acknowledge that she's the backbone of FIAZI, and nothing would happen without her. A big round of applause, please. Thank you, and we'll see you again next year. Bye-bye.